Soni joins us now, and it represents Uniparts. It's a recent company, just made its debut less than a year ago. I'm going to introduce the company, leading supplier of system and components of off-highway vehicles, that OHV, supplies critical and complex and low-volume multiple SKUs, and they are leader in 3PL and small tractors and global 3PL market share of 16.7%. Mr. Soni, good morning. Thank you for joining us. Now, let's understand the geographies and what's happening to the business. 50% of the business is coming from US, 23% is coming from Europe. Our understanding is that those countries are going through an economic downturn, and your dependence on those markets, in a sense, right now could have impact on the business cycle.
Good morning, and thank you for having me on your show at ET Now. Correct. We are an export-oriented company with the numbers that you've shared about the US and European market in particular. But let's talk about specifically the markets that we are addressing, which is the agricultural equipment market and the construction equipment market. Now, on the agricultural equipment market, I would actually break it up into two. One is serious farming, higher horsepower tractors, which the US is still maintaining a strong growth. And it's only on the smaller tractors that the market is a little soft. But on the OEM side, it is pretty strong. Again, on the European side as well, the agricultural market machinery is a strong indication that we are getting from all our customers. On the construction side, in fact, it is totally strong both in USA and in Europe, particularly because the $1 trillion infrastructure bill that the USA announced is really playing up pretty well. And the commentary from all our customers in Europe and USA is showing a very strong demand for construction equipment. So we are, in fact, for the current year, looking at a high single-digit growth for the current year, please.
Telling us is that irrespective of what is happening to developed markets, and especially US and Europe, your business is in fine fettle and you will continue to grow.
Correct.
Are you growing because you're gaining market share or the product category is expanding?
So it's a combination of both of them. And, the China Plus One is playing out to giving us a little bit more market share. Clearly, in the higher horsepower, where we only have a 7 to 8% market share, that is growing because of the patent that we took on a particular part. And we have, in fact, new business on the higher horsepower from customers like Casey Holland and AGCO. And clearly, on the construction side, we have, in fact, added a new customer in Korea. Our sales with the largest company in the US is going very well. We continue to attract more business. In fact, the business run rate attraction is now running at about 300 crores a year, out of which 90 crores has been put into production already in the last quarter.
Mr. Soni, you talked about how FY24 is likely to see a high single digit again in terms of the revenue. But what about the margins? Because the margins were very volatile on a quarterly basis, but at least on an annual basis, you're close to 23%. In FY24, what could be that number?
So, we did close to 22% last year, but there was, other income as well. But I normally say my company is like a 21, 14, 7, three numbers. So about a 21% EBITDA company with a 14% PAT and 7% free cash. And having said about free cash, even though we say 7%, last year the cash generation was 252 crores because we were able to cut down our accounts payable and accounts receivables, and balance them off.
Soni, the other thing I also wanted to understand, about the new order pipeline, how's that looking like? And whether or not you're looking at focusing on a particular part of the portfolio in terms of the product, the product bouquet that you have, or looking at diversifying further, any new product additions that you may be looking at making?
Good you asked that question. In fact, under agriculture and what we call as a three-point linkage system, we have actually developed a new system for UTVs and ATVs, particularly for the USA market. This market, in fact, is panning out to be larger than the less than 70 horsepower tractor market for 3PL that we have in USA. In fact, the largest customer in the world that we have for this product has just placed their initial orders with us, and we really see a lot more growing. This is entirely a new area that we are growing into under the 3-point linkage in the agricultural market.
In your presentation, you also talk about how one of the levers of growth is going to be inorganic through strategic acquisition and alliances. Talk to us about that. What's in the pipeline?
Definitely, we are actually looking at some organic, inorganic add-ons, but it's a little bit too early to talk about them. But when I talk about a growth level of in high single digits, that's completely inorganic here.
Like the high single digit is organic, but in terms of the acquisition, if you can't give the details, at least the nature of the acquisition, is it going to be a company with some new product profile? Is it going to be in the US region, Europe region? What's the kitty size you have in mind for such acquisitions?
Correct. So we are looking both in USA and Europe. Our bent of mind is more toward the US because of the ease of doing business over there. We are looking at anything with a top line of between $100 to $150 million. We are looking into areas like you mentioned that we are in the 3-point linkage and the parts for the construction machinery, what we call as PMP. Within the same customer base that we have, we are also growing into hydraulics and as well as other areas, and we are looking at acquiring companies in these new additional places, which will definitely help us to increase our overall business.
Now, well, you're sounding optimistic, but I'm looking at your Q4 numbers. The margins came down from 25.8, about 26 to 21. EBITDA came down from 85 to 70. Is this largely because of seasonality, or Q4 was an exceptional?
Okay, it was in Q3 and Q4, both were exceptional. Q3 because, the exchange rate, the euro went up dramatically from that 82, 83 level to 89 level. And the US dollar also helped us at that stage. But more so in Q4, both two of the things are passed through for us with our customers. One is steel as a commodity and the other is sea freight. And we saw both of them coming off, so they were affecting our top line to some extent. Also, because the sea freights have come off, in fact, are almost at the pre-COVID levels, we have also seen that the time it took for material to reach Europe and USA has cut down by about 30 to 35 days. And therefore, there is this huge buildup of inventory in the system that is now coming off, and that is what led to some of the lower numbers for Q4. But if you look at the complete full year, we were clearly EBITDA was at 22.9% and we grew at 15.3% and the PAT grew by 22.4%.
Okay, great. Good to have you, Mrs. Soni, and certainly hope to see much more of you going forward.
Thank you, and really appreciate you having us on your show as well. Thank you. Bye.
Thank you very much, sir.